Good day to all traders out there watching my video. So in this video I'll be giving out my outlook on Euro and GBP, right? The pound sterling for the week, which is as of 15 June 2025. So let's get into it. So I'll start on the weekly. The reason why I start on the weekly is because we are in the middle of the month, right? And already at the start of the month, we are done the monthly outlook for my expectations for the whole month, right? And so since we are now in between the start and the ending of the month, it's more reasonable to be starting from the weekly, which is also known as the intermediate time frame, right? Which is the intermediate time frame analysis. So yes, that is my basis for time frame selection, which is the weekly. So starting to look on the weekly, first of all, the order flow is quite bullish, right? And yes, I come up with such an evaluation because first of all, when we are probing order flow, we look at the highs and lows of the market, how they are being treated, because that's how the market makers move the market, right? They tailor the highs and lows of the market to their advantage, right? How they simply purge liquidity below a major swing point, like right down here, and they sucker in bearish pattern traders down there. Then they simply reverse, right? So in a nutshell, what I'm saying is that if market makers want to create higher prices, you should expect them to sucker in the beers below the lows, right? By making fake or mere closures below the lows, right? Or below the swing point. Then simply they expand upwards after the manipulation, suckering in the bearish traders, right? So when I'm talking of swing points or when I'm talking of highs and lows, you are specifically looking at the swing points, right? These swing points. Or as well looking at candle lows, right? They are highs and lows, right? And you can see that the moment price played below a candle low, it didn't it didn't take much time below the lows, and price clearly broke above the highs, right? So what I'm doing over here, it's called probing order flow, right? So swing points is just an aspect of the analysis, it's not everything, right? You also look majorly at the up close and down close candles, right? Which most of the ICT parrots call PDRAs, right? So basically, I've always said it in a bullish order flow, right? You expect to see the bearish candles being used as a propeller for price, right? And you can see that that's exactly what has been happening, right? Right over here, clearly defining the order flow of the market. Another important thing, which is also another reason why price moves, is the FVGs, the gaps created in the market, right? If the bullish gaps are being respected, then most likely you will evaluate the order flow to be simply bullish, right? So if the bullish gaps are being respected, then the bearish ones, you must expect them to be disrespected and also used as a what? As a key level, right? They must be disrespected. So these are the characteristics of a bullish market, and how I explained it is how you probe the order flow. So simply the order flow is bullish, and you can also incorporate order flow with something that is called it's a concept about dealing ranges, right? So dealing ranges are basically big expansion moves, right? That are imbalanced, right? For example, this expansion move to the upside, you can see that price never reached the equilibrium at any point to balance this expansion leg before you would possibly expect more expansion moves to the upside. Price never did so, and this opens the gate to our draw of liquidity, right? I've defined my order flow. I've defined my dealing range, and so I should start to actually have an idea of where price is going, right? Like I said, it then starts to open a gate to draw of liquidity where price is being drawn towards, right? And this is when I actually have the framework as well to start looking at my key levels or picking up my key levels. And at this point, you can see that price has reached this higher time frame key level, right? Which was a major draw of liquidity, right? And with this order flow that you could see, price respecting the down close candles, right? The down close candles propelling the market upwards. This was also an important draw of liquidity, which was an old high created in April, right? Right there. Also acting as an important key level, right? So there's a there's a thing that I want to tell you, that every time when price reaches a higher time frame key level, you expect the lower time frame key levels to be insignificant, to be unconfluential, right? I don't know if that's the right English word, or inconfluential over the higher time frame one, right? So a daily key level will not care about your breaker that's on the hourly, right? That's opposing on the hourly, or an FVG that's opposing on the hourly, right? This key level, it's a 3 months key level right here. So this really starts to define my draw of liquidity, because if price because there's an important question that arises when picking up your draw of liquidity, where you're expecting price to go, which is even more important than that specific level that you're saying price is supposed to go to. And what's that important question? It's how is gonna price reach there, right? You could say that you want to move to the UK. You could say you want to go to the Middle East, but it doesn't matter, right? Yes, it doesn't matter. You could say you want to go anywhere, but you see that the most important aspect of such a bold statement is how are you gonna go there, right? How are you gonna go to the UK? How are you gonna go to the Middle East, right? So if I'm to predict that price is gonna keep on being bullish, right? Because remember, in technical analysis, you can't really be right or wrong, right? You can only be logic, right? Since price is bullish, okay, my draw of liquidity can be up there, right? This current high formed right here, I could label it as my draw of liquidity, right? Okay, that's fine, right? I can't say if it's right or wrong, but it's the important question which matters, which is how is price gonna reach this specific high, right? And that's when we talk of propellers, right? That's when we talk of the mode of transport, right? Of course, if you are relating to price, we are talking of key levels, right? I hope you get something from this, because I'm also trying to open the way you do your analysis, right? So if price is gonna reach this high, then it has to reach a specific key level, right? That also has to be very important, right? Judging from that, price has already reached a higher time frame key level, right? You can see that the key levels that we have is this down close candle, right? This one, right? This is the only key level that can propel price upwards. So meaning that if I'm to expect price to continue being bullish, then I at least need to see price reach this very key level. I don't know if it makes sense to you, right? Technically, I'm still yet to move to the time perspective of price, but technically, I would need price to reach this order block first before it can think of doing anything. And another thing that will actually make this order block a much more strong force of attraction, right? A force of attraction is because of, again, the important question, which is how is price gonna reach this very order block? We have this higher time frame key level. You see how it becomes more logic, and how I can become more confident with this key level, right? 1.14199, right? Which is approximately, I don't know, 1.4200, right? That's a very strong and important draw of liquidity, right? That I can have confidence with because of the logic that is behind. And what makes it a strong force of attraction as well is the imbalanced price action that we have down here, right? The dealing range, right? The dealing range already suggests that at the equilibrium we have a draw of liquidity, and you can see that we actually have an FVG, a bullish gap down here. Of course, it's quite too far as compared to an already refined perspective that we already have, which is that order block, right? And so, yes, ladies and gentlemen, this is my draw of liquidity on the weekly for the euro. And another important thing, another important aspect of the analysis is of symmetrical differences, right? And you can see, if you look on this one, it's the pound sterling. You can see that the pound sterling also reached a higher time frame key level, right? It must be, I don't know, a 3 months, 6 months key level right there, right? I uploaded it a long time ago. I'm not sure, but it's either a 3 months or 6 months time frame key level. Of course, I refined it on the weekly, right? It's also a key level that's correlating the exact same way with euro, right? And on GU, I have a much more refined framework, which is this CRT here on the weekly, right? CRT low and CRT high. exactly. So this CRT suggests the same context of draw of liquidity, right? I still also expect year on GU to see price in the following week reach at least the 50% of this candle range, right? Once price has reached at least the 50% of this candle range, then I'm also looking at the opposite end, right? Which is also a gap in the market, right? A bullish gap. So this is my conviction also for the pound. And now moving on to the time perspective of the charts, right? First of all, when you're talking of time, we usually start with the seasonal tendency, right, of the particular pair. And if you look at the seasonal tendency chart for euro and the pound, it's usually a choppy month in June, right? We are reaching the end of a 6-month period, right, which is also the end of a quarter, right? So price is gonna be choppy, right? You can never be sure of getting an expansion during this time of the year, right? Especially this time of the month. But since we are in the main weeks of distribution, which is week 2 and week 3, yes, of course, you may expect some moves. But looking at the month overall, it's not a month of big moves, right? Of course, price may create some big moves, but when it comes to our expectations based off data from past 30 years, June is quite a choppy month, right? So we cannot be confident in evaluating any kind of bullish or bearish scenario at the moment, right? Based off seasonal tendencies. So the next thing that I would be looking at, that we'll be looking at in terms of time, is the monthly OHLC, right? Or the monthly pair of 3, right? This is when I mark my monthly opening and my monthly closing, right? Wow, this is some beautiful price action on GU that I can see right there. First week is usually a range, right? It's usually a range the first week, and you can see that indeed it was a range below. Right here you can see the first week. Then the second week, what did it do? It manipulated above the previous week's high, right? On euro it closed above, right? It closed above, reaching out to this key level. But on GU you can see price go above the previous weekly high and immediately reject below, clearly showing a manipulation above the candle previous week's high, right, which would be above the range high, which makes this CRT framework even more valid, right? Now moving on into the time perspective of the market, right? So now what I'm evaluating is now called bias, right? Directional bias, right? It revolves mainly around market profiles, right? Because if you see a range, then you usually expect a manipulation after a range, right? Then after a manipulation, you expect a reversal or a distribution, which is what I mainly expect of the next week, right? So my main expectations for this incoming week actually, it's a bearish classic candle, at least to the 50% of this candle range, then hopefully the CRT low and balancing this imbalanced piece of price action right there on GU, right? Then on euro, I do not have a candle range right in use, but you can see that this order block works perfectly as a draw of liquidity. And if you see an expansion into a key level, right, which is this old high and that higher time frame key level, you're most likely going to expect a retracement, right, or a reversal, right, before price would possibly think of keeping if of keeping on with the order flow, right? So this is what I'm expecting of the next week. If price is gonna continue to go up, then it needs to reach this OB. Then here on GU, I'm looking at this mean threshold of the candle range, right? So I think I've made everything clear for my weekly outlook right here, guys. My draw of liquidity is the 50% on GU to those who want to be trading GU. If you're into EU, then look at this OB. Expect price to move towards this OB effectively, right? So then the next thing that I'm going to be looking at is the daily time frame. It's the daily time frame. Of course, I'm going to start with euro. And on the daily, you can see a much more clearer picture of what we're already seeing of the higher time frames, right? This old high right there acting as my key level, being raged in the form of an expansion profile, right? So clearly you'd really want to see a retracement profile to a certain draw of liquidity before price can certainly continue with the order flow, right? You can clearly see the order flow on the daily being bullish, right? And so you'd want to see price fill in the bullish gaps, right, before price would possibly continue on with the with the order flow. So I've refined my draw of liquidity on the daily to this FVG, right? As the order flow is still the same, it's pretty much the same of what I was exactly seeing on the weekly, but now I've refined to this FVG, right, which is slightly higher above the OB on the weekly. And again, we also have a dealing range at this point. As you can see, so definitely price is imbalanced. So price needs to balance what needs to be balanced, and price can possibly continue. And in terms of my market profiles, on the daily, you'd usually wait for Monday as your framework, right? I can't evaluate that much of an accurate bias for Monday, right? But my draw of liquidity, whether it's Monday, whether it's Tuesday or Wednesday, is still towards this this FVG. If you are willing to risk your life on it, it's okay. You can establish your Monday daily bias to be bearish towards the FVG, which is still fine. But it's usually wise to wait for Monday first, right? But like I said, it's still fine. You can still evaluate a bias which would be bearish towards this certain draw of liquidity. Then let's look at GU and see what's happening. right? You clearly see on the daily the 50% of the CRT are throwing off, and yeah, you can also see the three dives pattern as well, which is usually a formation created by price when it reaches a higher time frame key level, right? Price, it's either it makes a V shape reversal, W shape reversal, or three swing points, right? Suckering in those reversal traders, right? People who were looking for bearish reversals, they are suckered in the first time, second time suckered in, and the third time is usually when you see price actually create the move, right? So basically on the daily time frame, I do not have that much framework. Like I said, it's usually best to wait for Monday, right? See how Monday does. But in terms of my draw liquidity, it's still the same though, right? It's still the same. I still expect to see at least price move towards the 50% right here, and the opposite end. And in terms of the order flow, yes, it has been quite bullish. You can see price disrespecting the bearish PDRAs, right? This bearish order block being disrespected, right? Being truly broken. And so this is why it's actually best to wait for Monday to do its thing, right? If price is on Monday creates if prices creates an expansion of this key level, then you can see, on Monday, then you can visualize this then as your draw of liquidity based off the order flow. But the astute must know what I say, that since price has already reached a higher time frame key level, then you should start having doubt in these lower time frame key levels to actually hold price to continue upwards, right? So meaning that my draw of liquidity would still remain at the 50%, right? And this short-term low and the CRT low. So basically on EU, what I would personally wait, I would actually wait on EU if I can see an intraday framework, right, on the 4 hour and the 1 hour. I'll just wait for Monday, right, hoping that Monday is gonna close below the opening of this candle, right? If it closes below the opening of this candle, then I can tailor it as my key level and trade off it, looking for sales from Tuesday till Friday towards the 50%. I think it will be already reached, and then of course the CRT low. So ladies and gentlemen, this is my outlook for Euro and GU. So the safest trades to be looking for, right, early this week, it sells, right? So as you move on to the 4 hour, you're looking for your 4 hour candle range, you're looking for your intraday setup. Of course you wait for your lower time frame setup to be aligned with the higher time frame. You're just not waiting for price to open then you budge in. Wait for price to open. Look at Asia, right? Was it a range? If it was a range, then you can expect a London open manipulation, right? And you can sell during London open manipulation, or maybe price is choppy. Even during London open, you look for a setup again at maybe during London lunch and New York open. So that's my advice as we move on to this new week, for you to be looking for sales, right? Um, and of course, the best decision to always make is to wait for Monday, right? Then after Monday, you can be pretty sure of what to look for, right? So remember, what makes you a good trader, right? What makes you an advanced, experienced trader is understanding that most of the time it's waiting. and then less of the time it's acting, right? So you shouldn't ever feel rushed, right? You should be calm, composed, understand what's going on, right? Then when an opportunity calls, when it actually calls, then you are engaged. You you take a risk. So, ladies and gentlemen, this is my outlook for you guys. I hope you find it insightful. If you find it insightful, then please tell me in the comment section so that I can keep on giving out these outlooks. Thank you, ladies and gentlemen. Cheers.